This is an Uncovered Japan company research report on Photosynth, ticker 4379. The company operates Akerun, a cloud smart lock platform that lets organizations manage physical access by subscription. The research question is whether a newly profitable, recurring revenue business can turn Japan's drive toward unmanned operations into durable growth. Photosynth's headline metrics frame the case. The report puts forward price to earnings at 19.6 times, recurring revenue at 87.5%, annual recurring revenue at 3.32 billion yen, and fiscal 2025 return on equity at 12.9%. These are not the numbers of a pure software company, but they show a subscription model that is becoming financially self-sustaining. Start with what customers actually buy. Akerun is attached inside an existing door, with no wiring or construction required. Employees, members, or tenants can enter with a smartphone, IC card, or code, while administrators grant and revoke access from a browser. Photosynth sells the system as device as a service. It retains ownership of the hardware and charges a monthly fee, turning a traditional access control purchase into a recurring service relationship. The revenue mix is still centered on Akerun, which accounts for 82% of fiscal 2025 revenue in the research. Akerun, a facility operations service for unmanned venues, supplies another 12%. The residential Miwa Akerun joint venture and the newer physical AI effort are much smaller today. This makes the core business easy to identify, while leaving Photosynth with options to deepen customer relationships beyond the initial door installation. The financial trajectory is the key change. Revenue increased from 1.60 billion yen in fiscal 2021 to 3.38 billion yen in fiscal 2025, a 20.5% compound annual growth rate. Over the same period, operating profit moved from an 854 million yen loss to a 231 million yen profit. The business is not yet large, but the direction shows that scale and the recurring model have begun to translate into operating leverage. This chart makes the profitability inflection clear. Both operating and net income were deeply negative in the earlier years, then turned positive in fiscal 2024 and improved again in fiscal 2025. The report treats this as an important milestone, rather than proof that execution risk has disappeared. Hardware costs, channel execution, and the scaling of newer businesses still matter, but Photosynth has moved beyond the cash-burning startup stage. Cash flow adds support to the income statement. Operating cash flow became positive in fiscal 2023. Free cash flow became positive in fiscal 2024, and fiscal 2025 operating cash flow reached 550 million yen. The balance sheet is deliberately more asset-heavy than a pure SaaS business, because Photosynth owns the devices it leases. That is a cost of the model, but also the asset base that produces recurring revenue. The report's moat argument has three main layers. First, Photosynth has held the #1 position in Japanese cloud corporate access control for 4 consecutive years. Second, Akerun connects with HR, attendance, property management, and customer systems, making a switch more disruptive than simply replacing a lock. Third, the device-as-a-service structure creates an ongoing contract rather than a one-off hardware sale. A reported monthly churn rate of 1.41% is the practical evidence that those relationships have value. Looking ahead, the midterm plan targets revenue of 5.8 to 7.5 billion yen by fiscal 2028, from 3.38 billion yen in fiscal 2025 and a 4.1 billion yen fiscal 2026 estimate shown here. The opportunity is tied to the spread of unmanned operations, broader partner distribution, and more services around the installed base. The watch points are whether new channels activate, hardware can scale efficiently, and the smaller residential and physical AI initiatives become meaningful. Valuation is more interpretable now that earnings are positive. The report puts the current forward price-to-earnings ratio at 19.6 times, below the 23.1 times historical average shown in this chart. That comparison is not a recommendation, and it does not eliminate the risks of thin liquidity, single market concentration, or execution. It does show that the market is valuing a profitable cloud access control business at a lower multiple than its own recent history. The scenario chart is a framework, not a prediction. The report's fiscal 2028 bear, base, and bull cases are 539 yen, 1,302 yen, and 2,670 yen, compared with a reference price of 374 yen. The range reflects the uncertainty around growth, margins, distribution, and valuation. Investors following the company should track recurring revenue, churn, large account wins, and whether the midterm plan becomes visible in reported results. To sum up, Photosynth is a category-leading cloud access control company that has turned a small physical device into a recurring subscription relationship. The business has crossed into profitability, benefits from Japan's labor shortage tailwind, and has a clear growth plan. The risks are also clear: a small and lightly traded company, a Japan-only market, and newer growth pillars that still need to deliver. This is research, not investment advice. Use the full 5-part deep dive for the evidence behind each point. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.